There's plenty to discuss about this $1 trillion pay package for Tesla's Elon Musk. Let's bring in Laffer, Tengler Investment CEO and CIO, Nancy Tengler. Nancy, great to see you. You and your firm own Tesla. How much do you own, and are you comfortable with them approving Elon Musk's pay package?
Yeah, Cheryl, it's great seeing you. I'm thrilled. I think this was the right decision for the company and for the shareholders. You know, Elon's not necessarily doing this for the money. He's going to get paid in all stock. He's doing it for control over the company. And if you think about it, Meta and Google both have restricted share classes so that the voting control is with the CEOs. Elon in particularly did not want to do that, but this is a way for him to just have I think, control over his concerns over the ethical and moral issues surrounding his army of robots and even AI. So we own it. It's one of our largest holdings in our growth portfolio. We just launched a new thematic portfolio and that's focused on quantum, robotics, nuclear, and space. And it's the largest holding in that portfolio because he touches on so many. The company touches on so many of those items.
Well, there's a lot of focus that's been put on this pay package, but what about vehicle deliveries in the EV space? You know, without government subsidies, not that that really helped Tesla before, but, you know, without kind of that, we've seen weakness in the EV market and demand kind of fall. Now that he's going more towards AI and robotics, and there's been reports he's really been focused on XAI, and that was a concern to some Tesla shareholders. Do you think that there's enough in totality for the company to really be a strong bet moving forward?
Oh, I do. I think it's the most important or the second most important AI company in the world. I mean, the vote on the purchase of or the investment in XAI was also good news for me as a Tesla shareholder. I want to own a piece of that business. Maybe they'll merge the whole thing in. Maybe we'll get to own some of space. But if you think about what's driving robotics and full self-driving, and think about the implications, like when my kids go to take my keys away, I can just hop into a robotaxi or a cybercab, or I can get in my Tesla with full self-driving. So I think it's important for the investors in particular to think about this as a major transition. He talks about it being a new book, not a new chapter. No one thought he could do what he did with Tesla originally, nor with SpaceX, and he was weeks away from bankruptcy and yet accomplishment. As he describes himself, he's programmed for war.
Nancy, I want to get some macro thoughts from you because we've been talking about this week, and this has been the pressure we've seen, in particular with AI stocks, the Mag 7, is these lofty valuations, frothy, if you will. Do you think the market's in a bubble right now?
I don't, and I think it's dangerous for a lot of my colleagues to come on and say that. You know, we've heard that the AI or just the tech trade has been over for the last 3 years, and it's not. This is transformational technology. I was managing money in the 90s. These valuations aren't even close to those, and the companies that we're talking about have fortress balance sheets, robust earnings, and lots of levers to pull. Microsoft is much more than just, for example, an AI or cloud computing company. So I think at investors' peril, they run away from this trade. We were in buying in April, and if this correction continues, that volatility is always the friend to the long-term investor. We'll be in buying.
Where are you putting your money right now?
We recently added to some of the tech names, but mostly we were trimming them because they got so far overvalued in the late summer. So we do have dry powder, to step back in. But we've also bought names like we've added to TJ Maxx. We initiated a position in Ulta. We like Quanta Services, which is building out the grid. We've added we own Raytheon. It's one of our largest holdings. So we have a diversified portfolio, though we do tend to run pretty concentrated portfolios, and that's how you generate excess total return.
Well, we also have we have a lack of data right now when it comes to either, CPI, PPI, the jobs data, et cetera. But we have been getting a lot of these consumer sentiment numbers. University of Michigan actually giving us a pretty bearish read on the consumer across all ages, incomes, political party. Nancy, does that give you any pause right now?
Yeah, well, it certainly does, but the tailwind to all of this, Cheryl, is that the One Big Beautiful Bill Act is retroactive back to January, but the IRS tax tables didn't change, so people are still having, withdraw the payroll tax withdrawals at the higher levels. We're going to see about $150 billion in incremental refunds to American taxpayers in the first quarter of next year. Corporations have already benefited to the tune of about 100 billion, and we'll have cash tax savings of about 150 billion next year. Earnings growth is robust. The economy is growing. So while I am concerned about particularly the low end consumer, some companies are succeeding in that space, like one of our holdings in our ETF TGLR, which is McDonald's. So it matters which companies you own, but it is important to pay attention to this because there is a concentration of risk amongst the lower income consumer.
No, I mean, certainly the earnings picture has been, in particular, you mentioned like a McDonald's, or I mean, you're finding definite winners and losers when it comes to who the consumer will spend money with. Nancy Tengler, it's always great to see you. Thank you so much for being here today.
You too, Cheryl. Thank you.